All right, all right. So you want to be a real estate investor and you're trying to decide, do I buy rental properties? Yes. Do I use long-term rental philosophies or do I use the short-term rental that's out there like the Airbnb or the bed and breakfast? And what's better? What's better for me? What's going to make me more money? What's more stable? How do I think about how I acquire things? And we're going to get into all of that right now, guys. So give me the thumbs up on the way in. We're going to do the pros and cons of buying rental properties and long-term rents versus short-term rents. All right, so first, here's what I would caution everybody. I really don't like buying properties based off of short-term rental revenues or projected short-term rental revenues. It's an extremely dangerous way to buy property. So if you buy that way, you are automatically going to be paying more than if you buy the property based on what traditional long-term rents look like and basing your potential revenue off of this. And so one other thing, just to set up our pros and cons, we are always value add investors. So in my mindset, we don't really ever buy the cash flowing, beautiful property. That's just not who we are. That's not in our DNA. We like to buy something that's really distressed, increase the value, and either we turn it into a long-term rental or we turn it into a hotel or we turn it into an Airbnb, but we get to choose what we're going to do and to what level we're going to renovate these projects. So if that's you, if you follow this line of thinking, if you're part of this community, if you're doing deals with us, this is how you're going to be thinking because this is how we're going to be thinking. So long-term rents provide you the most stability. You're going to know what you're going to get month after month after month. It's going to be mailbox money. It's as close to passive income as you're going to get. And we'll discuss later why short-term rentals are much less passive. There's a lot more work that goes into that. So first, for rental properties, the pro to buying long-term rental properties is that you get stabilized rents. Usually they're for 6 months or a year lease. We like to do things on our long-term stuff with at least 1-year leases, and then that gives you a chance yearly to raise the rents. So we're long-term rental investors. That's what we've done for 20 years. Well, really, for 25 years, we've been value add investors, but only for about 10 years have we actually owned rental portfolios. What we've seen recently with long-term rents in the States, and even to a certain degree, to a lesser degree in Puerto Rico, is that these long-term rents have risen really fast during this pandemic, during the last couple of years, from like 2020 to 2023. We've seen rents in Florida just absolutely skyrocket. I was on a phone call this morning with our property management company back home talking about 4 leases that are coming up. And we've got people that have been in there for a long time and they're paying rents that are significantly lower than what market rents are. So we were saying that in this house, the guy was $500 less than what Zillow says rent should be. In this house, the guy was $700 less than what Zillow rent should be. And another, there were $1,000 less. But these are tenants that have been with us for a long time. So while we're raising their rents, and we are raising everybody's rents for sure, we are not asking them to come all the way up to market rents because it's just not feasible, right? If someone's paying us $1,200 and Zillow says they should be paying us $1,800, for us to raise their rent to $1,800, there's just no way that that family's going to be able to absorb that. They're going to move almost for sure. And so when we've got good tenants and they've been there for a long time, we like to keep them in place. And so we only raise their rent $50 and we're making less, but we like the stability. So I say all of that because long-term rentals provide stability, certainty, and ease, and that close to passive investing. It's a really nice way. We love being landlords. We say it all the time. There are problems that go with it. It's not completely passive. There's work that goes into it, but this is a very stable, this is a very predictable way. And we have someone else living in the house, paying for our mortgages to the extent that we have mortgages. We mostly keep things in all cash. We don't borrow a lot of money, but when we do, someone else is paying for it. And so these are all benefits to long-term rentals. So now let's talk about some of the cons to long-term rentals because there are disadvantages. And I just mentioned one just a second ago. We have people who have been in our properties for years now, and they're good tenants and we don't want to lose them. But if they leave, we're going to be able to increase rents sometimes as much as 100%. I mean, we may have someone in there that's at $1,200 a month right now, and Zillow's telling us that we should be renting it for $2,400 a month. So if they were to leave, yes, it would be a problem, but we'd be able to raise the rents massively. So one of the cons to having long-term rents is that you can't always stay up to date with what the current market rents are. So on properties that we've owned for a long time, this is something that we see again and again. And we've known this. This has been the way that we've done business for years. If someone rents from us for the long term and they're there for 4 or 5 or 6 years, we're not trying to have them move out of the house. We don't want to make it so unaffordable to them. So even though rents have gone up, we're not capturing all of that rent. So that's a little bit of a downside, right? It's nice for our tenants. They get stable rents. They know that as landlords, we're not trying to drive them all the way up the current market, and they have a nice place to stay, and they pay a pretty fair price. When you have long-term renters in properties and you do 1-year leases, maintenance is a much bigger deal. It's much harder to get in and do the deferred maintenance. So in fact, recently we were doing some longer content about the passive income. We came upon one of our properties over in Bayamon where there's some deferred maintenance that we didn't realize. We've got 7 tenants in there, and the place kind of doesn't look good on the outside. I found out that what has happened is that we're pressure washing the place all of the time because there's a pigeon problem and they poop everywhere. So we go and we pressure wash it, and then the sun and the poop and the pressure washing has caused the paint to just look terrible, right? So we need to get over there and paint that place. But we have to coordinate that with all of the tenants. We have to let them know, hey, we're going to have to block off all of the parking for a few days. So this is a more difficult maintenance issue than it would be if we were doing short-term rentals. So this is one of the other cons for being a long-term rental investor. You've heard me say this on this channel. If you're a member of our community, you know that we believe that equity is our friend, that appreciation is our really, really good friend, right? Like, so when you're a long-term rental investor and you own something for a long period of time, which is generally like buying it today and planning to hold it for at least 5 to 20 years, you are going to get something that is magnificent called appreciation. And you're going to hit it out of the park, a grand slam home run. It really doesn't matter in what market you buy in. You can buy at the top of the market, the bottom of the market. If you own something for a really long time and you're a long-term rental investor, then you have someone else paying the bills for you, paying your mortgages down, creating equity. If you've borrowed money, they're paying that down. And if you own stuff long enough, you'll no longer owe the money to the bank. So you increase your equity. But along the way, values of real estate generally rise, right? And so over a long enough period of time, your property is absolutely going to rise in value. And this is something that we've discovered that is just so beautiful, that we can buy in any market at really any price. We can even pay things at the top of the market. We will never do that because it's not in our DNA. We're just not retail buyers. So we always buy the value add stuff. So we're buying stuff with equity anyways. But over a long period of time, our equity grows and it gets ridiculous, guys. It's so much fun after you look back and you've owned something for 8 or 9 years. You've collected all of these rents. You've paid for the property maybe 2 or 3 times over that period of time. And then if you go to sell it, you're going to make another 400 or 500% return on what you paid for the property. So we 10x regularly on these long-term rental properties when you take in the total accountability of all of the money that comes in through rents and through then a liquidation or a sale at the end of a long period of time. So that's a great advantage to long-term rents. So now let's get into what are the advantages and disadvantages of short-term rentals, and then we'll wrap it all up at the end of the video, and we'll compare the two, and we'll give you a combination strategy that is a can't miss. First of all, I'm going to reiterate this here. If you're going to invest in short-term rentals, please, guys, don't go out there and think that because somebody is projecting that short-term rentals are going to throw off X, that you can then pay Y. You need to be buying real estate based off of traditional long-term rental prices. You can do this. Sellers will be used to this. This is the way that appraisers are going to value properties. It's very rare that an appraiser is going to look at short-term rental income and call that money that is safe to appraise something. So I see people, particularly here in Puerto Rico, where they buy these apartments over on the beach and they think, oh, well, we're going to be able to short-term rental it. So we can pay $600,000, $700,000, $800,000 for this 1,000-square-foot apartment, and we can put it on Airbnb. I think that's a recipe for disaster. Multiple things can happen, and we'll get into them about how that can become a disaster, but it's a much, much safer way to invest is to buy something that's value add, so you get it at a low price, base your projected revenues off of normal long-term rents, and then if you decide to go short term, you've got some upside built in. So this is just investing 101. Don't buy based off of short-term rental revenues, buy based off of long-term rental revenues. They're much more stable and much more secure. But there are some benefits to owning short-term rental properties. The big one is you're going to get the property rented nightly. So you're going to make money often quicker. You're going to be having lots of checks come in from the one property month by month by month. And you're going to make, if you're doing it right, probably a far greater monthly revenue. I would think at least 2 or 3x. So if something is going to rent for $1,000 a month in Orlando, Florida, and we're going to do it as a short-term rental, we would expect to bring in $2,000 or $3,000 a month renting it as an Airbnb or as a nightly rental, short-term rents. So that's a beautiful pro, right? That's amazing. And you still get to take advantage of, by owning something a long time, all of the upside, all of the tenants are paying down your mortgages and those things. So those are the same kind of pros. You're owning something for a long time is always just a recipe for success, right? So real estate appreciates over time. This is how people build wealth. This is where people store wealth. You want to be in the real estate investment game. You're watching our videos. You've subscribed to our channel. You're part of our community. So if that's all true, we know that you are doing the right thing and that you want to be a real estate investor. Here's another pro, guys. The maintenance problems that you have on any property are much easier to address when your tenants are moving in and out quickly. They're going to tell you that the problems are there. You get to go in and fix them in real time. So you don't run into the problem that we saw in Bayamon, where you don't see something for a long period of time and you don't know that there's some deferred maintenance. You're there all of the time. You're there maybe even every other day or something like that. You have to go in and clean it. Your tenants, when they rent things short term, believe me, they're going to let you know when there's problems. So they give you ample opportunity to go in and fix problems. This, to me, is a great pro to renting things nightly. And that's why I like to do it. Part of the reason that we like to do it, our nightly rental properties, they look phenomenal. In fact, when you come and stay with us in one of our Airbnbs or one of our hotels, we try to make that place look like no one's ever stayed in there before. That's a stated goal of our company when we're selling something for a nightly rental. We want to have you come into it and go, wow, this place is brand new. This place is amazing. And so you get to take care of things to a much greater degree, something that I really, really like about short-term rental properties. So like everything, it's not easy, guys. There are problems that come with the short-term rental model. And so I'll run through a list of them, and you can then make a decision by the end of this video. Do you want to be a long-term rental investor, or do you want to be a short-term rental investor? Or maybe you want to do a combination, and we're going to talk about that again at the end. I was going to tell you about the can't miss combination, and we're still going to get to that. So here are the drawbacks to short-term rentals. There is a lack of consistent revenues. So there are times during the year when you're a short-term renter, when you're a short-term, like an Airbnb or a nightly renter person in Orlando or in Puerto Rico, sometimes of the year you have a massive demand, and other times of the year you have no demand or low demand. So that's a problem, right? That's steady income. The other problem is that it's way, way less passive. I have to tell you this, because if you're investing for passive, and passive is all in degrees, right? Like, so how much work do you have to put in for your money to make money for you? And in the short-term rental business, this is generally not considered a passive business. This is a lot of work. There's lots of turnover. You're managing staff at this point. If you're hiring a property manager, you're still hearing about stuff that goes on the day-to-day. If you're managing it yourself, you've got to have cleaners there. You've got to have people on staff that are going to fix problems as they come. You're going to deal with tenants. Last night, we got a call at 1:30 in the morning. And guys, I'm sorry, but when people go on vacation, they leave their minds at home. So they just don't think anymore. So no matter how much you prepare, and guys, when you rent something from us nightly, we send you in paragraph form and bullet point form both how you can enter the property, where your towels are, what's the internet, where you find the keys, or what's the code to the gate. I mean, it is spelled out to the T. You know exactly what you need to do. And regularly, like almost daily, we get those calls. Hey, how do you get into this place? They just don't even read. They don't take into account that you've had interactions with them and told them exactly what's supposed to do. Renters who are renting nightly, they don't have their mind with them. They've gone on vacation. They've checked out. They want things taken care of. And so you've got to deal with that. This is not passive. There's nothing passive about waking up at 1:30 in the morning and telling some tourist how to get into his apartment. So tourists leave their minds at home. It's always going to be a problem. It's not passive. Other things that are a problem with short-term rentals is that local communities will change the rules on you. In Orlando, Florida, they've outlawed Airbnbs. Unless you live in the house and you rent the smaller dwelling, you just aren't supposed to be able to do Airbnbs. So that's a problem, that people invested in properties thinking they're going to be able to Airbnb them. And then the government in Orange County, Florida, has changed the rules on people really kind of almost overnight. All right, guys, the last con that I can think of for the short-term rental market is operating expenses. Operating expenses are much, much greater, like double. So if you pay 10% to a management company for a long-term rental property, you're going to pay at least 20% to the management company to do the short-term rentals. So a lot more expensive, a lot more hands-on, way less passive, but more money. So you need to decide what's best for you. Here's a combination, and thank you guys for watching this far into the video. I got one more thing for you, so give me that like, that thumbs up, leave a comment, tell me what you think. Do you prefer the long term or do you the short term? A for long term, B for short term. We love the interaction. And if you want to get a hold of us, we're the flipflopflipperpr@gmail.com. That's our email address, and that's the very best place that you can connect with us. We like to invite people from this community to partner with us. We are always looking for great investment opportunities in both long-term and short-term and flips. I mean, we do it all, guys. We look at things. We're investing in Florida. We're investing in Puerto Rico. If some of this excites you and you'd like to do something with us, maybe you've got a great deal and you need some money. Maybe you've got some property in Puerto Rico that your family has that's been inheritance and you don't know what to do with it. Maybe we could talk about that. Or maybe you want to come and run a small guest house hotel, or you're a great contractor. We partner with many people on many different levels. We like to invest in properties that can potentially have a combination. So we like to buy things that had no use and then value add, and then we'll have commercial space downstairs. We may have some apartments upstairs, and half of the apartments we're renting long-term, and maybe half of the apartments we're renting short-term. And so that way we get multiple streams of income on these properties. We think that this is a really can't miss type of investment. We know that we're going to increase the value because we buy it at something that had no revenues. We buy it where it was very, very distressed. We bring it up to its highest and best use, and then we start to build the revenue. And each time we build a revenue stream, a different revenue stream, we're increasing the value of that property. We're increasing the stability of that property. So that is my can't miss way for people to invest and take advantage of both long-term and short-term rentals. And hey, we're even throwing in some commercial stuff there. So give me a like and a comment. Tell me what you think of this video. Do you like these pro and con videos? We've done a few of them. So we love to have the interaction. And thanks for watching. God bless.